Hello everyone, I'm Mark Zane and welcome to Zane Investment Solutions. Before we progress further, please take a moment to pause this video and review the following disclaimer. Thank you for that and welcome to week 45, end of week currency review. We're going to take a moment to review the end of week data from the daily FX to see what news and how it affected the market. We're then going to take a look at one of the charts today, the chart being New Zealand versus the United States dollar. So what we have up at the moment is the daily FX news website. So this is a good place to check all the upcoming news events to see how they affect the market and which way they may move a specific pair. So what you'll just need to do is to remember to put this into your local GMT time so that you get the times and dates according to where you are in your location. And what we're going to do for this exercise today is we're just going to come down here and we're going to filter on only the high importance news so we can just have a look at the most impacting news for this week. So now that this filter is being applied, you'll see that only high important news has occurred, and it shows the list of news which has occurred this week, and also the results, the actual versus the forecast versus what it was previously last month. What we would have noticed this week and towards the end of the week is that the New Zealand unemployment rate remained unchanged at 6% with a forecast of 6%, and the Aussie dollar interest rates also remained unchanged at 2% with a forecast of 2%. One of the important news this week, also towards the end of the week, was the pound interest rate decision, and this one was kept rates unchanged at 0.5%. And what this did see is some weakness heavily come into the pound, and the pound was heavily sold after this announcement came out because there was no real inkling on that they will raise interest rates probably in the first quarter. However, it is very likely that they will, and the pound is still very likely to strengthen against other weaker pairs such as the Aussie dollar or the New Zealand dollar or maybe even the yen. Later in the week, right towards the end of the week, we had some very important high news from the non-farm payrolls, and this news here is generally what really drives the market. And what happened is they revised last month's forecast from about 142 down to 137. However, this month's forecast of 185 was, wow, 271, just enormously higher than expected. And just looking at those numbers, you would have straight away assumed that the US dollar strengthened very, very quickly. And that was the case, and we'll show you a chart which reflects these. So that's why it's very good to look at these news events and make a decision on the chart prior to the events happening of where you think it may go and what news may come out. That will give you some good standing on making a decision whether or not you want to carry on riding the trade you're on, whether or not you want it to bring it to break even just in case it reverses on you, or whether or not you can see some support areas and you want to exit out prior to the news. So the news can go either way, but with a lot of research over time, you tend to get a bit of a feel of where the market's going. Let's just quickly now have a quick look at next week's data. And we won't go too heavily in this one, but just coming up for next week, obviously this is for our local time, Australian Eastern States time, but we've got some important news coming up. Australian unemployment change, unemployment rate. Both of these numbers will definitely affect the Aussie dollar. The Euro GDP numbers will be coming out, and then followed by the US advanced retail sales and the Michigan confidence numbers. So all of these numbers will have some impact on their relevant currency pairs. So just take a note of your local times and the events that come out, and just have a look at your charts and see what announcements came out versus what the forecast was and how it moved the markets. We now take the time to review the New Zealand USD. So we're going to always start at a higher time frame. We like to start on the daily. You can always jump up to the weekly chart if you like. And and just have a look at the overall trend. And generally, this is the 200 moving average, this blue line here. So when it's below the market, it's a good indication that the trend is going to continue downwards. So on a weekly time frame, we're looking still very bearish on the market, and we're starting to see the stochastic come back oversold. Drop back down to the daily chart. Again, we're down below the 200 moving average, so therefore we're looking at still being a bearish trend, and it's been there for some time now. And at the moment, we're looking at the stochastic coming back down to the oversold area, so we quite possibly could find some support around these levels. So what we want to do is just grab a trend line and just start dropping some points in roughly where it's bounced before. We can see it could find some support here, some support here, some support around these levels here. So these is probably the first area it could find some support, followed by some areas maybe a bit lower down to these levels down here. Looking left is always a good thing to do. This will just give you some ideas of where the market could reverse and turn, going along with some other indicators. So fundamentally, personally myself, I'm weak on the New Zealand versus the US dollar. Just that the New Zealand is probably going to be overall a lot weaker, and the US is going to strengthen. So obviously with those non-farm payroll numbers that came out late yesterday, we would have seen a sharp decline, and here's the decline right here as the market started to fall, and take into consideration that it's quite possible that in December they may increase the interest rates. So there was a bit of a talk there, and we'll see what happens with those numbers. So what we want to do now is just jump down to another lower time scale. We've jumped down to the 4-hour chart this time, and we just want to look for some type of wave patterns, as well as some support areas being broken. So as you can see, we're starting to pull down to this support area, and we can see some of the awesome oscillator, this red and green line coming down, and we've got a larger one to the one prior. So that generally means that there could be some further downside to follow. So looking on a wave basis, we could probably take the assumption, just reading into it, and just drop some numbers here and just say, well, that could probably be the start of wave A there. Then we could jump down. This is possibly could be the pullback for wave B. Then it's gone back higher to end wave C. And generally wave C, which is this movement here, can also be classed as a wave 1 movement. So we will just drop a wave 1 there as well. So that could be the class of the wave 1. Then after wave 1, we have a pullback for a wave 2. And after the pullback for the wave 2, generally a pullback for a wave 2 is probably about 61.8% fib retracement, somewhere around those levels. So what we can do is just drop in a fib retracement tool, drop those levels on there, and we can go, yep, that's pretty good. It's pulled back to 61.8, so that's a nice decent pullback for a wave 2 right there. Then we have a wave 3, and the easiest way to determine where wave 3 is to look for the first largest AO. So as you can see down the bottom here, we've got this AO, another large AO, and this larger AO. So we could take the assumption this possibly could be the trend for wave 3, and the trend for the wave 3 generally could be the longest. Sometimes wave 5 is the longest, but we've already done 292 pips versus what we could have seen wave 1 of 240. So it's a good assumption that this possibly could be a wave 3. Now, if for wave 3 to continue, we want to see some other wave cycles on a lower time frame. So what we want to do now is just drop in some indicators, drop down to the 1-hour chart, and we roughly know that this is where we thought the wave 3 started. So if we were to do the same thing again, but now on the 1-hour chart versus a 4-hour, we could again say, well, maybe this is wave 1 here, followed by the pullback for wave 2. Let me just re-correct that. Sorry for that mistake. And then back up here for the start of wave 3. So this is wave 3 coming all the way back down here. Again, we look for the largest AO. There's AO, there's the largest one. So we can assume that this large one was wave 3. So there's wave 1, back for 2, down for 3. Wave 3 ends with a pullback for wave 4. And with a wave 4 scenario, we can draw in the fib retracement tool again. And the pullback normally comes around 38.2. But there's no, it's 38.2 or 23.6 or 50%. It's just a rough area, but we always look left. So just remember that, always look left. And so even before we knew this point here, we could assume, okay, 38.2 looks like a good area. And looking left, there's some bounces around here. So let's just put a line in there and say, well, it probably come around about there. And look at that, very, very close to coming to it before falling again. So we can then take the assumption that this is the final leg movement, which is wave 5 back lower. Now, as you can see, wave 5 has got a large AO versus this one. So it's quite possible that this wave 5 could overextend, or likely could turn into another pullback for wave 6 and followed by another wave 7 lower. But at this stage, it's too early to tell. We can probably jump down to the 15-minute, just look at it again and go, you know, maybe this is a wave 1 on the 15-minute chart. So on the 15-minute chart up here, pull back for wave 2, down for wave 3, and then obviously we'll be looking for a pullback for wave 4. So at this stage, there's a lot of indicators pointing that there possibly could be a reversal, but we haven't seen any divergence at this stage. And divergence is where we see a lower low in price, but we see a higher AO. So when you see this AO come back over this zero line and then form another AO about here, so when we draw a line, the AO, this one to this one is gone higher, but the price is physically come down lower between these 2 points. That's started to indicate be some divergence. So look at the midweek video for week 45, and that will show you a bit about divergence. So let's just zoom back out to the daily chart. We'll remove this indicator, this line here, and some of the others. So based on everything that we've just discussed, looking at the wave cycles on all the time frames, looking at the RSI being oversold, looking at left for previous support and resistance areas, there's a good assumption that the pair could fall that little bit more before the reversing. So I think that probably covers everything on wave cycles for today, and just shows you how quickly the market will move when some good news happens in its direction. I hope you found that session useful, and I look forward to sending you a next session during the midweek of week 46. Thank you very much.